Born to succeed and ready to lead, can Uniqo succeed by protecting investors from themselves? The DeFi and financial revolution is certainly here. Well, it has started and we're making progress, but there's a long road to travel. Can Uniqo's Rebound token, not rebase, and tokenomics be the difference when it comes to DeFi and passive income gains? Let's find out. Hello DeFi family, my name is Bruce. Welcome to my channel, welcome to my DeFi life, a channel dedicated to unbanking you and me from the corrupt world of fiat, and the sooner the better. Hit subscribe and like this video, it's completely free and would really help my channel. I really appreciate it. Don't take my videos as a reason to invest. Always do your own research on any of the projects I discuss on this channel. I feel like with each iteration of DeFi protocols, we're getting closer and closer to what will be sustainable for people to finally invest in DeFi with total confidence. And each innovation of smart contracts creates a new hoop to jump through that helps promote sustainability. I get it, because as we've seen with FTX, if you leave things in the hands of humans, we're not going to make it. So let's find out what makes Uniqo so Uniqo. So right off the top, I'm impressed with the website, uniqo.finance. Very professional looking and well-branded. Information is very prevalent, so I think that's a big tick from me as an ex-Web 2 developer. It looks very nice. Even if you look at the application, if you log into the DApp, the dashboard, incredible amount of information and very well laid out. So very, very professional. Something to come back to and have a look at a little bit later. So at the core of Uniqo is the 1% per day passive income, fixed 1% per day on the stock or the shares that you hold. So this is nothing new to DeFi, and there have been plenty of protocols promising 1% per day. Some survive, some don't. Actually, 1% per day is the limit that I believe in. I think if protocols are promising more than 1% per day, I just don't believe that more than 1% per day is sustainable at all, especially when whales get involved. On top of that 1% per day, if you were to let this investment just compound for a full year, Uniqo is offering 3,777% APY on your initial investment. So if you just let the tokens sit in your wallet, you purchase Uniqo, let them sit in your wallet, you're going to be earning 3,777% just by letting it sit there. So this is super simple, and just like Optimus, all you need to do is buy and hold your tokens in your wallet to earn that 1% per day passive income gains. The protocol and smart contracts automatically distributes your rewards every 30 minutes, so you don't have to. Your wallet balance will grow automatically every day. So as mentioned earlier, the Uniqo team prefer to use the term Rebound token and not rebase token. And this, with other tokenomics, is what allows the sustainability of the token and the price floor. So how does the Rebound effect work? I'm glad you asked. Let's have a look at the white paper for Uniqo, which is linked down at the bottom of the website. Click on the documentation, and what I'm really impressed with also with Uniqo is their thorough and very thought out white paper, which really describes and explains every detail from start to finish. Now, if we want to learn about the Rebound token, we click on the Rebound link right here. I'm not going to read this word for word, I'm just going to give you a quick description of what the Rebound effect is and what it does. Uniqo uses a self-aware smart contract that constantly monitors the supply levels of Uniqo at each epoch. If the Uniqo token level rises above 7% inflation, this will trigger the Rebound effect, essentially burning the correct amount of Uniqo to bring the Uniqo BUSD pair back to a sustainable ratio. So essentially, if inflation is too high, the deflationary effect, or the Rebound effect, will be triggered, keeping the price stable and maintaining a price floor, maintaining investment and asset protection in any market. So let's have a look at the chart for Uniqo and see how it has been performing in the first week of launch. So if we click on Uniqo in the last 24 hours, like 340 sells as opposed to buys, but the price is staying quite stable. Now, is this all down to the Rebound effect? Not entirely. There are other tokenomics at work here in Uniqo, and we're going to get into those right now. So again, there are more details in the white paper, a lot more details that will cover what I'm explaining right here, right now. So I encourage you to read the white paper in full before investing in Uniqo. So what other tokenomics are at play here that make Uniqo sustainable? Well, first off, the capital you invest in purchasing Uniqo token is essentially sunk funds, meaning you cannot withdraw or sell your bag in its entirety at any one time. I get it, this is kind of an uncomfortable idea for a lot of investors, having their funds technically sunk into a project. This is really just one step to protecting investors from being dumped on by whales. The next stage in Uniqo tokenomics is called DTP. Now here we have a link to DTP Ratio. Now, DTP ratio is short for daily take profit ratio. This is traditionally called a trading curb. This trading curb, or DTP ratio, is put in place to protect the investors from whales dumping large volumes of tokens on the community, which will dramatically dump the price. And as you saw earlier on the charts, there's a lot more sells than buys at the moment, and the price is still staying quite steady. Put it in simple terms, anybody who buys a Uniqo token is limited to sell only 1% of their total holdings every day. So essentially, you are limited to only selling the passive income gains you make every 24 hours. Now down below here, we have a chart explaining in detail how a DTP ratio is calculated. So again, I encourage you to read this in more detail. Essentially, in the case of whales, if anybody holds more than 1% of the total supply of the LP pair, then their DTP ratio is adjusted and reduced accordingly, as you can see in this chart right here. Everybody starts at 1%, but as your holdings grow, your DTP ratio will reduce if your holdings is above 1% of the total holdings. So anywhere between 1 and 10%, your DTP ratio will start reducing. For example, if a whale holds more than 1% of the total supply of LP, they will have a DTP ratio of somewhere between 1 and 0.1%, meaning they are limited to sell less than 1% of their holdings because they have more tokens to sell, which balances out effectively and makes the protocol more fair for everybody. This seems on face value really simple and effective math, and time will tell if it remains effective, but looks good seeing the current charts. I know it's still early, but we'll keep an eye on it for the next few weeks and see how things look after that. If we go back to the tokenomics, we can see there is buy-sell taxes. The buy tax is 12% and the sell tax is 15%, and the tax distribution is as follows. The auto liquidity multi-sig, 50% of the tax from transactions goes into liquidity, so boosting up liquidity. 30% of the tax goes into a treasury wallet, and 20% of the tax goes into a burn address, so it gets burned. Now, it's important to note that transfers are also taxed. If you transfer a portion of your Uniqo token to a new wallet, you'll be taxed 35%. But in the case if you are transferring your entire holdings across to a new wallet, you'll not be taxed. That is usually the case if a wallet has been compromised in any way. Also, another interesting point from the team is never-ending liquidity. So what the team states that with self-aware contracts and the buy and sell taxes, that there will be never-ending liquidity. The math kind of makes sense here, as the more people that buy in, and with 50% of the buy and sell taxes that are used to boost liquidity, it would take a big fall off of new investor funds entering the system over a long period to actually drain the liquidity. Hopefully, the addition of treasury investment will help even further to ensure liquidity is actually never ending. And that is one other point, as you saw in the taxes, that 30% of the taxes will be going into a treasury. And what is that treasury? Well, if you look here on the protocol revenue, with the aim of generating external streams of revenue for Uniqo's protocol, treasury will be invested in multiple external protocols that will generate yield on deposits. That is interesting to note. 30% of the taxes gained from buy and sell taxes will be going into a treasury and be invested elsewhere. So it'll be interesting to see what details come out of that. So from the initial launch, the liquidity was $2 million total. The current liquidity is 4.4 million. So it's been 1 week, more or less 1 week, and it's already doubled in size and liquidity. So that is a good sign. It is staying steady. Those tokenomics seem to be working in the initial stages. We'll see if that continues over the next few weeks. So how to buy Uniqo. So if you go to the homepage of Uniqo, right at the top you have a buy now, which will take you to a switch finance DEX, and that will allow you to buy Uniqo using BUSD to swap for Uniqo. Also on the dashboard, if you go to the dashboard, you have a swap link here, which will take you to the same switch finance DEX. Now let's have a closer look at the Uniqo dashboard. I really like the look of this dashboard. It's very, very professional. There's so much information and it's laid out quite beautifully and quite professionally. So going from top to bottom, we have the APY. If you just compound or you just hold your tokens in your wallet for a full year, you get an APY of 3,777%. It shows the current market cap, 4.6 million, the current supply, 98%. The circulating supply is 1.06 billion and burned is 1.92%. We have the total holders Uniqo token right here. So if this goes up or down, you can see that right here on the dashboard. This is quite interesting. Then we have the price chart. It shows you the price chart over the last few days, and as well as the burned token. So how many tokens were burned in order to keep the price stable. Then down here you have the rebound effect. So this will tell you whether the rebound will be happening. If this reaches 7% inflation, there will be a rebound effect triggered, and it doesn't happen every day, but it only happens when this reaches more than 7%. So it's really interesting and the protocol itself and the smart contract itself is very, very transparent. So that's really, really interesting to see. And then if you are invested, you can go over to your account. All you have to do is connect your wallet. Once you connect your wallet and you have Uniqo in your wallet, all the information will be shown here. Your total balance, your daily earnings, your monthly earnings, and then your total daily take profit. So what profit you have taken, and then the available daily take profit. So you might have some profit that you've taken, not all of it. You might still have some available to take. And then your DTP ratio. So again, this DTP ratio should be at 1% for everybody, except if you're a whale that owns more than 1% in the liquidity pair. Again, we have the price chart, a nice looking chart that gives you details on where the price is at. So if you're interested in buying or selling, it will tell you where the price is at, and you might be in a position to buy or you might be in a position to sell. So again, this is really, really professionally laid out. One of the best dApps that I've seen for one of these daily passive income protocols. And then we have this little calculator which tells you what you might be earning if you invested 200,000 Uniqo tokens over 6 months. After 6 months, you would be holding 1,198,000 Uniqo tokens at a value of $5,261. So what does 200,000 tokens cost me right now? Let's have a quick look. That is $880 for 200,000 tokens. So at a price of $880, you would receive 200,000 Uniqo tokens, but you probably need to buy a bit more with the buy tax being at 12%. So I would suggest $1,000 will get you 227,000 Uniqo tokens. So $1,000, what does that get you in 6 months? 227,000. That would get you a total of $6,000 in gains, or almost $6,000 in gains from $1,000 investment over 6 months. That is a hefty gain over 6 months at compounding every day and not claiming a single time. And with the tokenomics, we could expect the Uniqo price, which is currently almost half of 1 cent, to stay quite stable. Potentially, if Uniqo gets enough interest and enough investors coming in, we could see 1, 2, 5 cents, you never know. The dashboard has a link to the white paper, so don't forget about the white paper for Uniqo. I suggest if anyone who's seriously interested in investing in Uniqo, go through this entire white paper. It is very, very well written. It is very well laid out. There's a lot of interesting information on the tokenomics and on the auto compounding, on the fixed passive income, the self-aware contract, smart contract. There's a lot of information here to digest, so I suggest taking the time to read that if I have not answered any of the questions that you have from this video. I can see what Uniqo is trying to do, and I do hope this protocol will succeed and be around for the long term and be the next iteration that DeFi needs. With these kind of tokenomics, there is no real reason to think otherwise. Like I stated earlier, with each launch of a new protocol, we are learning and growing just a little bit each time and taking tiny little steps towards something more sustainable over time. I believe in the next bull run, DeFi will be in a good position to onboard the masses. In this current market, and if you do decide to invest in Uniqo, not financial advice, then I do not recommend being a die-hard compounder like some people tend to be. Uniqo is very new and just launched, so you need to have a strategy to regain your initial investment and then work with profits moving forward. It would be good to get more information about the treasury investment ideas, so hopefully over time there will be some transparency with that. Uniqo has completed 2 audits with Solid Proof and Fairy Proof, but not yet doxed or KYC'd. In the future, it would be nice for the team to dox at least to show the community that they have confidence in the product. We all know that a community is one of the biggest and most underrated assets a crypto or DeFi project can have, but it is hard to maintain or build a strong community without open and transparent leadership. As the saying goes, born to succeed, ready to lead. To continue your DeFi adventures, please check out the 2 videos I recommended for you right here. Don't forget to subscribe to the channel, hit that like button, smash that notification button. Don't forget, you guys, look after yourselves, because I love ya. Talk to you soon. Cheers. Bye.